Is the financial world falling apart? Should you sell everything and move into a bunker? Let's talk about it. Now, to be honest, I had a completely different video lined up for this week, but I felt the need to kind of speak into some of what's going on, some of the chaos that's happening in the world and in the economy right now, because it's going to be really scary. I wrestled with the decision to make a video like this because I felt like, one, a lot of other creators are doing it so much better than I, with so much more, like, Johnny on the spot information that I just don't have the bandwidth to go and collect right now. And great for them. I'm actually going to link it to a couple of videos that I think are helpful to keep perspective in this time. But for this video, I just wanted to give a real high level overview of what I'm doing, how I'm viewing the situation, and what you can do to keep yourself in the best position possible. So if you go onto Google right now and you type in stock market, you're going to scroll down and see nothing but headlines about how the S&P 500 is dropping, the Dow Jones is dropping, and everything's going crazy. And there's going to be a lot of blame, a lot of speculation on what this means, what this could look like. And I'm not even going to comment on any of the political sides or anything. I just want to help keep us in perspective a little bit when it comes to our investments. And I want to give some practical advice later on as well. But first of all, I just want us to remember that investing, especially like investing for retirement, but any kind of investing is a long-term gain, right? And we have to remember that over the long term, historically, the stock market keeps going up. In fact, a great picture that I have that the money guys use is of a person going up a mountain, right? So the mountain is going up all the time, and the person is holding a yo-yo, playing with a yo-yo. And so the yo-yo goes up and down, but the mountain is, once you zoom out, the mountain is what you see, and it's steadily going up over time. So that's like the stock market. And the reason for that being that we are human beings, we're creative, and we like to add value. And so there's always going to be humans out there innovating and adding value out there, like that affects the economy. You know, Apple's going to be making more cool stuff, or the next new company is going to make something even better. And it's just a tend towards adding value over the long term, of course. Now, in the short term, are there going to be downturns? Are there going to be times when the market, crashes, or bear markets? Of course, they've happened throughout history. And in fact, you might be surprised to learn that a lot of the significant returns that people have made over the last couple of years have been from drops in the last decade or two. The Great Recession, people who were able to buy into the market in that time period were actually able to see really cool gains, again, over the long term. So you have to have a long-term perspective. So if you ask me what worries me most about this downturn, for me personally, I'm honestly just wishing that we had more money to put into the stock market, because it's like a sale at the store. It's just, you're buying in cheaper and cheaper into something that over the long term historically is going to keep going up. And right now, ironically, we're kind of sitting on the sidelines as Rachel isn't making income to get a match or having anything going into her 401k. And I am getting PTO, but my system is a little different. It's a pension system. It's not participating in the market in the same way. And so I'm just like, I wish we could buy in more, but that's just not where we are right now, and that's okay. But I want to encourage you, if you are somebody who's investing regularly, keep doing that. Now is the time more than ever to keep dollar cost averaging into the market. I think that if you stay the course, you don't panic, you don't let some of these headlines scare you and pull out all your money, that I think you are going to see, probably quicker than you would expect, the returns from, the stock market typically has a V-shaped recovery, which means like you pull it down like a rubber band and it's going to shoot back up. Again, that's just typically, what we see in the market and in the history. I'm not telling you, what investments to do. I'm just saying that being in the market, buying in when it's cheaper and cheaper, when you are still young and have, decades to go before retirement, that's historically been a good bet. And that's something that I will continue to do throughout the course of my career, is dollar cost averaging into the market. So with that said, let's talk about, if you are older, if you are about to be ready to use these dollars in your retirement. Now, you might be saying to me, that's great for you. You're young, you have time. But I was planning on retiring in the next year or two, and my portfolio, which has gotten quite massive, has taken a huge hit. What about that? Well, I sympathize. I mean, I'm glad that I'm on this end of the investing spectrum. I do think that if we hold on, I think that we're going to see a return to normal faster than what people think. But regardless, I'm not a financial advisor, so I can't give like investing advice or anything like that. But I do think it's a good idea, just as when you're working, you're actively earning money, the typical advice for an emergency fund is 3 to 6 months of expenses, so that if you lose your job, you have some buffer to carry you over until you start earning income again. Now, it's different when you're retiring, because you are relying on your own dollars, theoretically, maybe Social Security, but you're relying on your own portfolio to support you. And so it's really a good idea, in my opinion, to not just have a 3 to 6 months emergency fund, but instead have more like a year to a year and a half. And the reason for that is that if there's a dip like there is right now, if you're able to use that cash that you have sitting on the sidelines, then you're not having to sell in the worst market conditions. You can ride it out until we see hopefully some recovery before you start going back to, siphoning off those investments. Now, I want to talk a little bit about these tariffs that are going on right now. Again, I'm not going to go into the political side of the things at all. And in fact, I'm not going to go into very much details with the tariffs themselves. Like I said, I will link to some more in-depth videos that I found really valuable on the subject. But it's possible and even probable that we are going to start seeing some effects of this in the prices that we are paying for our goods. And so it's kind of like the inflation that we've been experiencing the last couple of years, where it was really high and prices were skyrocketing. I don't know if it's going to be like that, but it's always good to expect prices to go up. That's why we have things like cost of living raises. Now, cost of living raises can often fall short of where inflation actually is. But I do want us to talk about what you should be thinking about if we do start seeing some price increases. So my advice here is honestly going to be the same that I've been talking about since the beginning of this channel. Know and understand your cash flow. How much money is coming in and how much is going out on a monthly basis. Setting up systems so that you know exactly how much you're spending and you're prepared for those things that happen every month that are one-off random things. We need to be prepared for all those things. And once you have a number, you can tell me, okay, this is our monthly burn. Then you know what your margin is, right? The margin is the extra money, hopefully, that you have after covering all your needs, that you can, and some of your wants, of course, that you can take towards your goals. So that margin, understanding your cash flow, helps you understand margin, and having your margin understands what you can do to pivot when things like price increases happen. Because if you have your budget razor thin margins, there's no margin, and all of a sudden your grocery bill is going to go up $200, a month, or however you break that up, that is going to break your budget very quickly. You need to have margin, and you need to understand how to pivot when you notice trends like this. So, a couple of months ago when egg prices started going up, we understood that one, we needed to take it easy on the eggs, right? That's one lever you can do. You can buy less, right? Or you can continue to shop at lower prices, go to Aldi's instead of, Whole Foods, unless Whole Foods is one of your values. If it's your value to eat extremely healthy, like organic stuff, that's great. Build it into your plan. But that's one lever, is to buy less or to buy cheaper, right? Another lever that you can push is increasing your income. If you're in a situation where you have negative margin, right? You have the opposite of margin. There's a deficit in your budget. One, congratulations. Most people can't come to that conclusion. They just assume. They would rather either not look at it or just let their money go into the vortex of a credit card or whatever, so they don't have to come to terms with the deficit of their budget. But if you do have that, obviously, one thing you can do is a side hustle or a part-time job or something like that to increase that income to take care of that deficit. And also taking away the emotional roller coaster of these one-time big expenses that hit you, car repair or tires or AC repair, something like that. You can actually set up systems where you're using some of that margin. It's not true margin if you're having to account for those things. You can use some of that to make sure that when those things happen, they're not derailing you the same way that maybe they were in the past. So, downturn or no downturn, economic crisis or no, knowing your cash flow situation, good or bad, knowing it is the first step to pivoting in the right way. So that's it, you guys. I am not changing radically my financial system. I'm not selling off my investments. I'm certainly not selling off my investments. And I hope that you take from this to look away from the headlines for a little bit, zoom out, go look at the S&P 500 chart and zoom out and see how it steadily goes up over time. And just let this be an encouragement to you to take the first step of getting your cash flow under control. And that first step really is understanding your expenses, your income and expenses. So get out the spreadsheet and put your income at the top, list all your expenses, include estimated savings for things like tires that are going to happen, you just don't know when, and list out your debts, because another level we didn't talk about is paying off your debt. And then once you kind of have a big picture of what your cash flow looks like, you can start taking steps. You can start taking action to move through either the Ramsey baby steps or the financial order of operations, or basically just getting financial security with some emergency reserves, paying off debt, and get investing. And if you can start investing now, do it. Don't sacrifice the other two things, right? Don't just put your last dollar in the market right now, especially with a ton of debt on your hands. But if you are in that position, now's the time. If you're a long way away, I encourage you. I'm going to be getting back in there as soon as I can. And over the long term, I think we will continue to see some good things with the stock market. It's really scary, though. I understand that. And if you want somebody to kind of look over your financial situation, again, I'm not going to look in your portfolio or anything like that. That's not what I do, except for I would help encourage you to stay in, or to not sell in a panic mode, to not be emotionally led in those decisions, right? But I can be here to help you if you want another pair of eyes to look at your cash flow situation, to help you understand what the optimal path is for you for your use of your margin. I'm not talking very well right now, and that's okay, because I want you to understand that I'm a real person, right? I have real expenses, I have real struggles, and I understand that you do too. So don't go it alone. Go to newstoryfinancial.com. Check out some of the coaching that I have there. Especially just launched a program specifically for engaged couples. I would love to work with you if you are engaged and you don't know how to get your financial foundation set before the big day. I would love to help you with that. I'm already working with some couples on that, and I'm enjoying it immensely. So check out newstoryfinancial.com. Please like this video, subscribe to the channel. I really appreciate it. Leave a comment. Gosh, man, it means the world to me when I see a comment on one of my videos. So please do that. I would love to respond to that comment and engage with you. So with that said, sorry that this is another different kind of video, but I wanted to address this. Thanks for hanging out with me, and I'll see you guys in the next video.